So we're at about 18,373. Manishi Raychaudhuri is Asian equity strategist, equity cash Asia Pacific at BNP Paribas. Manishi, great to have you with us here. Thank you very much. You got this rupee weakness that I want you to address, which is starting to emerge again. Almost a 0.5% weakness in the rupee against the dollar. Your thoughts in terms of what that represents and what that is showing. We have no great dollar strength anywhere, at least not this morning or over the last many days now.
In fact, when we met you guys, Prashant, just about a month ago, and I was in Bombay at that time, I think I had hinted about this, that Asian currencies in general would have another round of, turmoil, possibly late into this year and spilling over into first quarter of 2023. I think that's just about beginning to play out. The reasons are not difficult to, sort of imagine. We still have a significant degree of Fed tightening left. We think another 125 basis points, beginning with a 50 basis points tightening in December and another 75 basis points in the first quarter of 23. And perhaps more importantly, quantitative tightening, which the Fed has highlighted time and again, is just about midway. From September, the Fed was supposed to accelerate it to $95 billion a month. They have only done about $65 to $70 billion a month, and that acceleration is likely to come through now. I think we are seeing some effect of that in those markets, in those economies, which have a chronic current account deficit. So India could turn out to be a little more vulnerable as a consequence of what we're likely to see. It may not be a long drawn-out affair, but it'll certainly be a short and sharp depreciation. In fact, just to let you know, a couple of days ago, in fact, the end of last week, we downgraded India in our our Asian model portfolio to a neutral from an overweight stance that we have had for quite some time. And instead, we upgraded China to an overweight. And this also kind of links to that same phenomenon that you're talking about. And we think China reopening seriously over the next couple of quarters is a driver towards this, outperformance of that hugely beaten down market.
Okay, that's interesting and that's important. So you're saying you've downgraded India to a neutral from an overweight and upgraded China. Got that. Manishi, good morning. By the way, I just wanted to highlight for the benefit of our viewers, these are the first signs of a steep sell-off in PSU banks. So is the rally over? Only time will tell. But I do want to get your attention. Central Bank of India, UCO, IOB, Bank of Maharashtra are all down about 1 to 4% Just keep that on your radar. Manishi, what do you do with IT names now? There's a mixed view coming in. Some large corporates telling us that there are furloughs, there are delays in decision making. But then some others saying things are not too bad. Do you stay away from this pack entirely or do you use this dip to buy?
We have incrementally turned a little more bearish, a little more cautious on the IT services sector. In fact, this downgrade to India that we did, it's really concentrated in two sectors. We have taken out exposure to the consumer staples sector, lock, stock, and barrel, and we have reduced exposure to the IT sector quite significantly. In fact, we had two of the frontline large cap stocks. We now have only one. So yes, I would think that this IT companies, which have done reasonably well over the last couple of months or so, up about 15 to 20%, they would have a round of underperformance because we're now entering a period where the recessionary impact on demand in the developed markets would become more apparent.
Hi, Manishi. Morning. When we chatted a couple of months ago, you said that you like some of those auto-related stocks. Do you still like them?
Right.
And if yes, which is the segment you prefer? Oopsie. All right. I think we'll try to get that line back. By the way, the Nifty is under some pressure. We are approaching that 18,350 odd mark. So I think you need to be looking at this mark very, very important. If it has to bounce, you're likely to bounce in this vicinity of around 18,350. The 18,400 puts a lot of open interest build up. The premium is around 50 rupees. So that's why we're saying that this mark is very, very important. But I believe we have Manishi back with us. Manishi, you're making a point on auto stocks. Your preference out there?
That's right. So we still like the auto stocks, the four-wheelers, and in particular, the top-rung frontline four-wheeler companies, which not only have market leadership and therefore have pricing power, who are also the beneficiaries of a very large distribution network. We are adherents to the concept of affluent consumption in India, and we think that that's a theme that's likely to play out. It's already been playing out for the past 6 months or so, and it's likely to play out for much longer.
Affluent consumption, right, Manishi? No, got that. So what else, Manishi, are you excited about, sectors, subsectors, anything else? By the way, in a bit from now, after you, will be speaking with a defense company. I mean, perhaps the best placed play on Indian defense, Bharat Electronics, but go on.
Right. I mean, I don't disagree with that. In fact, simultaneously, as we speak, we have we have published a very, detailed report on the Indian capital goods and industrial sector. And defense spending is one of the key themes that we have highlighted. And we are quite positive on that theme. Even though the capital goods or industrial companies as a whole, as a group, they may not really, be very palatable to the investor base because of the sky-high valuations that they have reached. Defense is clearly one sub-segment that we like over there. Now, coming back to your original question, what are the other themes that we like in India? First, India is clearly going through a very strong cyclical economic upturn. If you look at credit growth at 16-17%, if you look at GST collection, which are about 25 to 30% higher, it clearly points at strong revenue growth for the corporates and a strong underlying economic demand. We think one should play this through the banks, and we like the private sector banks. The banks not only have possibly the cleanest balance sheet over the past decade or so, even the corporate universe in general in India has a deleveraged balance sheet. The total debt to equity ratio is hardly about 0.5 or so. So, I think that's one important pocket in India that we like. Apart from the usual ones, I talked about autos. I think some of the telecommunication exposure and even healthcare through both the leading pharmaceutical and the leading hospital stocks should be considered at this point.
All right. Since you spoke about defense, we're going to take a cue from there. Manishi, thanks a lot for stopping by and speaking to CNBC-TV18.
Thank you.
Well, defense stocks are on fire. The government is aiming for an import subsidy